Hey, everybody, this is David Skrika, profit from pessimism.com. So look, let's just quickly look at some stuff here. Um, let's hope I get the right window. Yeah, I do. So we're just gonna quickly look at today. Let's look at gold. Why not? Breaking out like crazy. There's a market today down a little bit, and we can see. And like you hate to be so confident in some bullish trade. So we'll look at the GLD. And this is a huge move, and it's obviously very overbought. And I wouldn't be chasing anything at these levels, but it just kind of seems like a no-brainer now that, in the next 3 to 5 year type period, we're going to continue to see gold do well with all this uncertainty. And like, I think another thing that's come out recently is that this Doge thing just isn't working. The savings now, Elon Musk, which were supposed to be a trillion to 2 trillion, he's now got it down to, I think, or they have it down to 150 billion. And a friend of mine told me that's what they're going to increase military spending this year. So that doesn't even include the tax cut, right? So, and then, Trump's expecting all these tariffs to get all this revenue, and they'll get some more revenue, but it's not going to be enough. If that's true, that's 150 billion increase in defense spending, plus a $450 billion tax cut, plus the increases you're going to see in Social Security, Medicaid, Medicare, because the baby boomers continue to age. It's like there's no way they can fund that. And then, of course, another problem is the bond yield. I'm just going to quickly look at the bond yields. The bond yield is not going lower, even despite all this volatility in the market. And it looks like we are going to be entering a recession. Like, I have to take the retail sales with a grain of salt today, because probably a lot of people were buying ahead of the tariffs, like knowing that prices were going to start going up, April 2nd, after the tariffs were implemented. There probably were people were buying things last month in anticipation of that. Like, I know, for example, recently I ordered a new cell phone, and part of the reason was now he dropped the tariffs on electronics and cell phones and the whatnot, but they're still gonna be more expensive because they're still, from China, 20% tariffs. So I bought a new cell phone when the big tariffs were before that, because or I did recently, because I was like, well, the prices of cell phones could go up 50 to 100%. So that's a kind of people, like, I don't want to call it hoarding, but that's what they kind of do. But, and, the gold continues to do well. And of course, we'll look at the US dollar quickly here. And you can see the US dollar is back near these lows. And I think they wanted to value the dollar. We go look at the euro. Euro here. Now, I know the euro short term looks overbought, but let's get a 20-year chart. And we can see the euro here, like, we kind of broke this short-term resistance here around 112. Really, the next resistance then is now 120 to 125. If we break 125, really, we can go back to like that period in like around, the 2008 to, 2013, when the euro was peaking in 140 to 160, right? So, and like with Trump kind of killing the tourism industry right now, because foreigners aren't coming to the United States. We're seeing that. That's why airlines and other income, and we're seeing the travel numbers. Maybe this is another way, only way to get it back. So let's just quickly look at we're not talking about that today. We'll look at the GDX, and you can see these kind of gap ups here. We're really seeing the gold stocks starting. Because remember, this is the best of both worlds for gold stocks right now. You can see 10 years highs. We're getting back to the highs, actually getting now back to the point where we're getting back to that period of the topping right here. Remember, gold was only 1900 there. So, a lot of these stocks have issued shares, et cetera, et cetera. We'll look at the GDXJ, which is also breaking out. You can see this is a clear breakout now. You can see it's quite a bit low. It's still 50% off its highs. And let's look at the CDNX. Still not quite there, 634. That 650 still seems to be like, not been able to do it, right? So, so that's basically it. The CDNX has done very, it's still kind of lagging. The juniors lagging. Obviously, the liquidity in the market selling off are kind of hurting this. So anyhow, I think I'll just, that's it. So yeah, what can we say? Trade deficits, dollar rolling over, interest rates not really going down, because of worries over debt. So everything is kind of lined up for gold. Again, I'm always a little wary when something is this overbought. And so especially like this is not like a little penny stock. This is the actual gold bullion price, right? So I do get a little worried. And of course, we'll look at silver as well. But, you see silver still kind of lagging here. I think this is a good sign, though, that we're kind of not near the top of this rally. Because if we look at the top of these rallies, like, especially you can see it here in 2008 to 2009 or 11, silver tends to really outperform, and we're not seeing that. So I think that's kind of a positive thing. And yeah, I would still say, like, there's certain silver stocks I would go out and buy today. Like, one thing about them is they're not, like I said, because they're not as expensive as some of the gold things. Some of the gold equities, I might go out and buy, because there's still that are some that are not nowhere near price for $3,400 an ounce. So I'm going to leave it at that. Hope everyone is great. And oh, sorry for not having this out for about a week, but I'm kind of in the stretch run for the book. I've been writing a lot of marketing material for my publisher, and also writing a lot of podcasts, a lot of big name people in the financial industry, hoping that, you know, they'll read the book and maybe give me a chance to come on. So I hope you understand that. And I had to deal with something with my residency, my immigration stuff here. And really, I spent most of Monday and Tuesday running around for that. Because for some reason, it was not being renewed. And then I figured out what the problem was. And hopefully that gets taken care of sooner rather than later. So everybody take care. Bye.